has announced a $2.1 trillion package to help shore up its faltering economy as it braces for new risks posed by Donald Trump in the White House. The president-elect has threatened to impose 60% tariffs on all Chinese goods entering the US in a move some fear will also hurt Australia. To discuss this, I'm joined by Ivan Colhoun, Chief Economist at CreditorWatch. Ivan, thanks very much for joining me. Do you believe that Donald Trump's economic policies have the potential to hurt Australia?
Well, look, it's a complex range of policies he's putting together. So there's a proposal for 10 to 20% tariffs on virtually all trading partners, so that can have a direct impact. And then, of course, as you said, there's even larger tariffs potentially proposed on China, 60%, up to 60%. Now, we'll have to see if all of those come in. He has said what he promises he will deliver, so I think we have to take it very seriously. And obviously China is our biggest trading partner, so anything that impacts China in a negative way will have some effects back into Australia as well. Now, again, I said it's complex because he's proposing cutting company taxes or the company tax rate in the US, and that normally helps the share market out. And if you put on tariffs, it normally pushes up the US dollar and pushes the A dollar down, so that can have an offsetting effect to a certain extent as well. So very complicated, but you would think it's a bit of a negative for growth.
Do you believe his economic policies will add to inflation in the US, and what would that mean globally?
Yeah, I think that's what markets have been most worried about, the extra inflationary impulse. And remember when he put those tariffs on back in 2018, inflation was much lower there, so we're putting much bigger tariffs on at a time when inflation is higher, so that might perpetuate that cycle. And we've seen longer dated interest rates rising, bond yields selling off because of the fears of fiscal spending being higher if it was a Harris administration, and inflation being higher if it was a Trump administration. So that's definitely a concern. And higher interest rates, of course, in general, are less positive for growth around the world. So that inflationary aspect is another concern for markets.
The RBA has indicated that it's keeping rates in Australia on hold for the moment. It says there's a lot of uncertainty ahead. Do you think that Donald Trump winning the election will have any impact on when it decides to cut rates here again?
Look, the RBA always says that it mainly decides on domestic conditions rather than what's happening overseas. I think what they have said very clearly is they want to be more confident that inflation is coming down to the target band. So that's they're trying to get it to 2.5% by the end of 2026. They need to see these quarterly CPI readings, not the headline CPI, but the trim mean, below 0.8. And they're not confident at the moment. They probably aren't going to be confident until May next year at the earliest. And if there's a lot of tariffs going up, typically, remember, those tariffs impact on US consumers more than Australian consumers. We're not putting tariffs up. I wouldn't expect our government to engage in any tit-for-tat tariff increases. So it's an indirect effect. To the extent the Aussie dollar might be a bit lower, it might hold it up for a bit longer. But we just have to wait for our inflation numbers to moderate a bit. I think Mr. Trump's decisions will really impact US inflation more than Australian inflation.
During the campaign, we heard Donald Trump ask voters, are you better off now than you were 4 years ago? And this has obviously become a common line that we hear in election campaigns. Just a few weeks ago, David Crisafulli was saying it in Queensland. Why are many Australians not better off now than 4 years ago?
Well, I think we've had these very big price rises, as everyone knows. We talk about the cost of living crisis. It's a cost of doing business issue as well, because businesses face a lot of the same price pressures that consumers have seen. So inflation prices are much higher than they were before COVID. So that makes people feel worse off. Their wages haven't gone up as much as prices have gone up. if the RBA gets inflation back to 2.5% by the end of 26, that doesn't mean prices have gone down. It just means that prices are rising more slowly than they have done. And that would mean the prices, or the price level as measured by the CPI, was around 26% higher than it was before COVID, just 6 years ago. Now, wages haven't gone up by 26%, so people are feeling that cost of living pressure.
Thank you so much. We do have to leave it there, but that is Ivan Colhoun, Chief Economist at CreditorWatch.